We have generally tended to be underweight India within the fund, which is more a reflection of the valuations we see on offer in the country. And we found it harder to get that combination of high return on capital, attractive valuation and attractive dividend stream that we look for.
Hello from Cologne, from the FundView studio. I'm here with Mark Hammonds from Guinness Global Investors. We're talking today about Asia, about emerging markets and how those emerging markets can benefit from investors reducing their US exposure and shifting towards Europe, maybe Asia, maybe even China. Hello. Hello, Mark.
Hi. Thank you for having me.
Yeah, the market environment is pretty interesting at the moment. A lot of investors are reducing their exposure in US equities, shifting towards Europe, shifting towards Asia. Could Asia, especially, and probably even China, benefit from this situation at the moment?
Yes, I think you're right. A lot of people are taking this as an opportunity to revisit their exposure they have to the US and looking at other regions around the world where they can get new exposure, whether that's Europe or Asia and so on. I think what's interesting about Asia in particular is we're starting to see a lot of the longer term trends. So some of the longer term sort of structural tailwinds that are working in Asia's favor starting to coalesce and coincide with those shorter term trends in the market. And we're starting to see that sort of being reflected in greater enthusiasm for Asian stocks. I think if we go back to look at some of the areas in which Asia and China have become sort of world leaders, as it were, China has obviously been undergoing a program of sustained investment in a number of industries and now leads the world in 5G technology, in electric vehicle supply chain and manufacture. And I think the fruits of those investments are just starting to become clear. Particularly if we go back to the beginning of this year, we had an announcement from China that China was now leading the world effectively in AI development with DeepSeek, or certainly producing an outcome that was unexpected to many investors. I think if we look at the path that China's taken and the sustained investment that's really brought them to that period over 10 years, it wasn't quite so much of a surprise. It really reflects the progress that China has been undergoing.
So would you say a good environment, adding more exposure to Chinese equity? Because especially in Germany, a lot of investors reduced their exposure. It was not investable anymore for a lot of investors in Germany because of the political situation. Would you say there is a change now in China?
Yeah, I think a lot of people are starting to revisit that view. And I think one of the things that we always look for is, within these countries in Asia, where can you find those companies that have achieved sustainably high returns on capital over time? So where is it you get these companies with those persistent, more mature sort of cash flows, where that repeatability of the operating results that the business achieving is reflected in the financials? And if you can find those companies that are generating lots of cash, they are the ones that can pay out dividends to shareholders whilst also reinvesting in the business, so able to grow that dividend over time. So in China, obviously in the news recently, we've had the sort of second round of the trade war with the second Trump administration. I think, as I said, that reflects to a greater extent a lot of the progress that China has made already, and also some of the US's political ambitions, as it were, and so far as it relates to reshoring production back to the United States. What we've seen from China so far, I think, has been a pretty robust and pretty resilient response. I think China sees itself this time around in a relatively strong position. It has other markets and other countries where it can export goods. And I think it sees a lot of that sort of pain from tariffs as being borne by the US consumer primarily. So there are many options that China has at its disposal. I think for us, as I say, it's more about finding those opportunities within that space. Where can we find these high quality companies, and where are those companies likely to benefit from some of those longer term sort of structural tailwinds?
And talking about India, it's a booming market. A lot of investors say India is the new China. How is your allocation in India? Are you as positive as many other investors are in?
Yeah, I mean, it's a very interesting and dynamic economy, and there's lots of exciting developments, whether that's in technology and in the fintech space, in other areas of the economy where sort of domestic consumption is booming currently. So we do look at it very closely. We have generally tended to be underweight India within the fund, which is more a reflection of the valuations we see on offer in the country. And we found it harder to get that combination of high return on capital, attractive valuation and attractive dividend stream that we look for. We have had exposure in the IT services space in India. That's generally been a better area for us to look at. You can get those businesses that earn those high returns on capital and are very cash generative in terms of how the dynamics of how they earn those returns. So it is potentially an interesting country to allocate to. And I think we've seen recently some of the sort of excess enthusiasm start to come out of that market. So I think in future there might be more opportunities thrown up there for us to look at.
The economy grows, or the economic growth in emerging markets is always, or was always big and very positive, but the equity markets were like lagging behind. Would you say now is a good moment to add more exposure to the emerging markets and they can kind of catch up?
Yes, I think, as I say, we've had a period where people are starting to reevaluate where they are invested. I think emerging markets have always had that sort of strong growth potential, and we've got countries in there that are growing faster than developed markets, and that's been the case for some time. I think for us, it's a question of, the valuations are attractive and we think they'll be supportive over time. So where can we find that earnings growth and where can we find that sort of reliability and persistency? So that's why we look, whether it's from an Asian perspective or from a global emerging markets perspective, where can we find those high quality companies in the region that can translate that higher economic growth into ultimately higher returns for investors and an attractive dividend yield as well.
Perfect. Thank you very much for your insights, Mark.
Thank you.